Good morning, everybody, and welcome to our BWO-Expertise analysis of the tender results, part 2, areas centrally pre-investigated. And some of you might ask, what is to analyze on this? No stakeholders made a bid. The latest auction for centrally pre-investigated sites marks a watershed moment for the offshore wind in Germany. Yes, as already told, no investor submitted a bid on the 2.5 gigawatts offshore in the areas of N-10.1 and N-10.2. And the industry has been warning for this for years against this outcome. Today, we are going to analyze the background of these results. We are going to look into the reasons for the missing bids, and we will discuss what needs to change in the regulatory framework before the next auction takes place. A few words, let me tell you a few words on the format of BWO-Expertise. As usual, we will have an expert who explains the backgrounds and the mechanisms. And after this, we will have time for a discussion and for your questions. This is important. You can place your questions in the chat whenever you want. And I will transfer these questions and our expert will answer. Our expert today, and it's an honor to have you here, is Dr. Matthias Janssen. Welcome. Matthias, you are Associate Director at Frontier Economics, based in Cologne, and you have many years of experience in advising on energy market design, regulation, and competition policy across Europe. We both know each other since more than 10 years, it might be even 15. We don't know exactly, at least I don't know, maybe you remember better. Since joining Frontier, you have supported governments, regulators, and companies on electricity market reform, renewable energy integration, and policy instruments for the energy transition. With these words, I'd like to hand over to you, and yeah, I'm thrilled to have you here.
Yeah, thank you very much, Stefan, and good morning to you and everybody in the audience. Very happy to be here today and looking forward to the discussion. I'm going to share my screen. Let me know once you can see that, please. So should be working now. Let me know if not. Yeah. Looking forward to discuss the economics of offshore wind and in particular the German auction. Maybe before I dive into that, a quick word on Frontier Economics. You already introduced myself. Thanks for that. Frontier Economics is a so-called economic consultancy, one of the big ones in Europe, spread across the whole continent, and we support clients, both private and public, across all kind of topics that require economic know-how. And energy is our biggest sector expertise, where we support clients both on commercial aspects across the value chain, like litigation, M&A, or bid strategy support, like that one here. But equally, we also do more kind of policy-related work, such as market design, regulation, or auction design. And all this comes in handy for this year today. I just see the question where the slides will be shared. Happy to do that. And I think BW has foreseen that anyways. So now on to the auction. So I plan to talk a bit about what has actually happened in the latest auction in August and the drivers behind it, as Stefan said, and then talk about ways forward. So what could be done to kind of improve the situation. To start with, like I guess you all have seen the news early August about the latest auction for centrally pre-investigated areas 2.5 gigawatt, as Stefan has said, has failed. No bidder submitted any bids, and now the talk is going on what to do with it and how to change the design going forward. And to add a bit content and substance to what has happened, Stefan already said the sites that have been tendered are N-10.1 and N-10.2, like in the North Sea, like roughly 100 kilometers off the shore. And these have been pre-investigated, which means like there are some investigations have already been done. So developers that bid for these sites, they know that there are no kind of showstoppers to actually build an offshore wind farm in these areas, which kind of reduces the risks for developers and bidders. The submission deadline was 1st August, but as said, no bids have been submitted. Some additional information: this is an auction for to bid for the right to actually build and operate an offshore farm in these areas on these sites. It does not comprehend any support payments from the government to the wind producers, but it's the other way around. So wind producers bid money to get the right to build and operate a wind offshore farm. And this is very important. We come to that a couple of times today. One kind of implicit thing to know, and which is important, is that the grid connection to these areas, that is included. So once you get the right to build and operate an offshore farm, this will also be connected. You don't have to pay for the grid connection, which is different in some of the other countries' auctions. Capacity 2.5 gigawatts, split in 2 for one area and 0.5 for the other site. Expect full load hours, like roughly below 3,000 hours per year, which is less than in some other areas, which was down to kind of wake effects, which we will also touch on. The timelines, the sites, once a bidder would have got the award, would have needed to go into operation 2030 or 2031. And the selection of bidders would have been done not on a pure price only basis, like in many other auctions, but only 60% on the price bid, so the highest bid, and 40% on other qualitative or non-price criteria, which are also taken into account in this sort of auction. Now, before diving into the drivers of why this has failed, a bit of kind of historic context, if you want. So it's important to know that there have been quite some development in the German wind offshore auction and support design in the past. So if you look at the capacity that is already in operation, which is like roughly 10 gigawatt in German offshore, and also at the capacity that is under construction or where FID has been taken already, then this comes from kind of very different support and auction designs. So to start with, before 2017, there were no tenders or auctions at all. So the majority of today's wind offshore capacity that is in operation stems from a regime where the government actually paid and still pay money to the operators, which is a so-called sliding scale premium. So the developers or operators, they sell their electricity output on the market, and in addition, they get a top-up payment, a premium, and this is determined with the strike price, and the strike price also like roughly around 15 to 19 cents per kilowatt hours. And this has been set administratively, so without an auction. Then in 2017, auctions were introduced, and 5 gigawatt have been tendered in 4 rounds, but still the direction of payments were from government to producers, with some interesting results at the end in 2021 and 2022, where bidders have been willing to accept 0 bids, so no payments to them, and then because kind of negative bids were not possible, there needed to be a lottery to select the successful bidders. And on the basis of this experience, that the government has seen that wind producers are willing to accept 0 bids, or would have even paid to get the right to build and operate an offshore farm and get the grid connection. They changed the design with the WindSeegesetz 2023, which kind of triggered first auction in 2023. And since then, 6 auctions have been done. It's 1 auction per year for 2 different types of sites. The so-called centrally pre-investigated sites, like the one I just talked about, where the auction failed, and the so-called not centrally pre-investigated areas, where successful bidders would still need to do some of the investigations on their own, with some according risks to it. And it's now tenders for the right to get access to the site and build and operate an offshore farm, and bidders are invited to pay as much as they want to get this right. And we see that the auctions for not pre-investigated areas have been so far successful. So 3 auctions, in total 10.5 gigawatt have been tendered and awarded, though the price fell significantly from the first auction 2023 to the last auction just recently in June 2025. And equally for the tenders for pre-investigated areas, there have been 2 successful auctions. The one in 2023 came with a significantly higher price than in 2024, and the 2025 auction kind of failed. And we see that the price development more illustratively on this slide here, where you see the not pre-investigated areas in green, with higher prices in €1 million per megawatt hour, than the blue line, which is the pre-investigated areas. And the reason why the green line is above the blue line, although these sites are pre-investigated, so have a kind of higher value in a sense, there are a couple of reasons. One is there is so-called non-price award criteria for the pre-investigated area sites. So bidders have to take into account all sorts of additional conditions and think about the price implications of this, like on decarbonization, on apprenticeship, on security, and this comes with additional cost and thus lowers the bids. And equally, there are like higher deposits and tighter deadlines for the areas with pre-investigated areas. So this kind of explains the difference between these 2 lines. Now, more interesting, why did the last auction not reveal any bids, like we see here in 2025? So what has changed compared to previous auctions, where as we can see here, bidders have still been willing to pay to get the right to operate a wind farm in these sites. And this is actually, like, it didn't really come as a surprise to most of the observers, I think. But to start with, it's important to know that there are quite some conditions on bidders or that are bidding to get access to these sites, and these did not really change over time. They've been there like since 2023 pretty much. But it's still very important to know them, and they come with quite some risk. So as I said, there's no support payments to the wind producers, but they have to sell their electricity output to the market. So there's quite some long-term market price risk, and equally there's volume risk, obviously. And so investors or operators that are bidding in the auction, they need to be confident that they will earn higher revenues over the lifetime of the project than they have cost. And when they bid, they have to provide quite some securities, as you can see here. So they have to pay a 10% of their bid upfront. They in addition have to provide a deposit of 200 euros per kilowatt, and that is higher than in the auctions for not centrally pre-investigated areas. And they have to comply with quite some strict timelines, like a couple of examples here. So 12 months after a successful award, a successful bidder has to submit the application for permission, and accordingly has to submit like all sorts of material with it. And then there is also a deadline for showing the proof of existing finance, including all sorts of proof for offers for the different components. And that is like roughly 3 years before the grid connection will be finalized. And for the auctions we talk about here, this would be as early as 2027. So then there's quite a risk between this and the actual start of operation. And there's another deadline for that, which is 6 months after the grid connection is finalized. The wind farm needs to go into operation. And whenever a development fails or misses one of these deadlines, there are quite some substantial penalties, and it's even pretty much a all or nothing penalty. So, for example, if you miss the deadlines that I sketched here, even by 1 day, you have to, or you kind of lose the award. You lose the access to the site. You lose, and you also lose your deposit. There is some softeners in the Windseegesetz, but they all come with quite some risk for the developers, for the bidders. And as I said, that hasn't really changed like since 2023, but the more macro developments have changed, and then in combination with these strict conditions, the business case was just not viable anymore for, like, as it seems, all potential bidders. And the two big developments are the cost increase that we can observe. And here we see an example of a levelized cost of electricity for wind offshore in Denmark. So there's quite some nice data from the Danish Energy Agency, which publishes cost data every other year. So here we see a comparison of the 2022 edition and the 2025 edition, and we can see that the levelized costs have increased substantially between these two editions, and the key drivers of that are general general inflation, interest rates, obviously, but also supply chain challenges that are quite severe in the wind offshore business recently. And that, in combination with decreased expectations for revenues from the sale of electricity. And again, we see here an exemplary graph, which is showing the expectations of so-called capture prices for wind offshore. So that is the price, the electricity price that offshore farms can expect to generate going forward. That is from Green Giraffe. And again, you see a comparison of 2023 forecast, that's the purple line, with 2025 forecast, the green line, and see this revenue forecast has gone down significantly. And one of the key drivers for this is the so-called cannibalization effect, which gets more and more severe, which means that whenever you are able to produce electricity from wind offshore, others are also able to produce wind from both on and offshore, electricity from both on and offshore, and this kind of lowers the price of the electricity they can sell, and as such reduces the average revenue that you can generate. So over the last 2 years, the business case has worsened, and this leads to the result that we have seen. And as I said, it didn't come as a surprise at all, given the developments that we have seen before. So now we still have very ambitious wind offshore targets, which you can see here on that graph. So it's 30 gigawatts in 2030 compared to the roughly 10 gigawatt that we have in operation today, and then goes up to 70 gigawatts in 2050. So we can see that there is a couple there's some capacity which is under construction in addition to what we have under operation. There's a bit where FID is already taken, and there's some additional capacity where there's an award out already, which is the striped area here in red and white. So once these awarded capacities don't pull out, which can always happen, then there will be quite some substantial capacity addition to what we have in operation. But at least in the longer term, there need to be substantial additional awards and capacity to achieve the targets. So there will be then we'll need to, if we want to achieve the targets, there will need to be a change in the auction design very quickly to get to the targets and achieve the targets. Now there is also, and I don't want to hide that, there is a discussion about whether we should stick to these targets or not. And whenever we have this discussion, we need to take into account the kind of the costs and benefits of it. And I won't dive into this in detail, but it's important to kind of have this in mind. So, for example, the key downsides of wind offshore, if you want, is that obviously the costs are higher compared to other technologies like wind onshore and PV, which is also why these, at least recently, a merchant operation did not come across. And there's also additional kind of system cost, which is the offshore grid connection cost, which is also substantial, as we can see from the recent network development plan, 160 billion plan for connecting wind offshore. But there's also quite some system benefits of offshore, which is important to highlight, and that is the electricity supply from offshore wind is comparably stable. So it has significantly higher utilization, fluid hours than onshore wind, for example, and solar. And also very important, it provides electricity in those times where solar availability is low, like for example in winter months when it's normally very windy, less sunny. And the domestic potential of wind offshore is significant, which is a bit different for most of the other technologies, like renewable technology like biomass and hydro, for example. So wind offshore also provides an opportunity to reduce import dependency and enable decarbonization more generally. So this is a debate as such, and it's ongoing in Germany and other countries as well. But I will abstract from that now and discuss like what needs to be done if we want to make offshore a continuous success. So that is what we call options for the way forward. And basically, if you look at the development of the bids, you can come to the conclusion. So either you try to increase the bids, and there's like several levers to it. So you could try to reduce the cost and the risks, and as such increase the bids. For example, you can relax the conditions that I talked about, like the timelines, the penalties, for example, or you could even allow for longer operation of wind farms. So far it's 25 years, but there's good reasons to think about like extending that to 30 or 35 or even more, like in other countries, which would lower the cost. There's kind of auction product design. There's also things you can think about in the more wider offshore system design to try to reduce the capacity density, and that discussion is also going on. You could allow for offshore hydrogen, which could enable new revenue streams. And then there's wider policy options in strengthening supply chains, for example, or reducing other risks like the market zone configuration, which is the potential market split, which is quite some risk for offshore developers. And then you could also accept kind of negative bids in a way. So that means you could introduce a support mechanism, like that would be kind of back to what we had earlier, or we already see in other countries happening. So not expecting the developers to pay to the government, but accepting that the government needs to pay some money or security to the developers. And that's what I want to focus on now, because this discussion is quite topical and also a bit controversial, and that is centered around the contract for difference. So CFD as a mechanism. I mean, to start with, what you see on the bottom slide here is that the EU kind of mandates two-sided CFDs to be kind of the new standard instrument to support renewables. And also the German instrument and the state identification for the German instrument expires soon, so there will need to be a follow-up anyways. Whether that is possible for the next auction 2026 for wind offshore, that will need to be discussed. But the general logic of CFD is really that the operator continues to sell electricity output on the market, so kind of merchant, but then there's a strike price, which is more or less a cost proxy, which can be determined in an auction, for example, and the reference price, which is a proxy for the revenues that a producer can receive when selling on the market, and the difference between that strike price and reference price is being either paid by the government if the reference price is below the strike price, here the green arrow, or if the reference price is above the strike price, then there's a payback or clawback where the producer would need to pay to the government. And as such, this kind of classical producer-based CFD would provide price certainty for the producer, still leave volume risk with the producer, and still have some incentives for an efficient operation, but to a limited extent. And interesting to know that other countries have had similar experience, like Germany, in particular Denmark, where there was an auction in December 2024. The design was quite related to, or quite similar to, the German design so far, and it failed. Like very similar, no bids submitted, and as a reaction, after quite some discussions and consultation, the Danish government now introduced a new new mechanism where there is a CFD, a 20-year two-sided CFD, where bidders would then get some support, some certainty. Equally, there is also Norway, which had a CFD for a while already, and is now for floating offshore trying something else like a direct grant, which can also be of interest when discussing the options for Germany. Important to know, like CFD, not CFD. So there's all sorts of design questions to be discussed when thinking about CFD. One is whether it should be one-sided or two-sided, although the EU more or less answers that question. But in more detail, like whether it should be generation or capability-based. I'll touch on that in a minute. The duration of the contract is very important for the risk profile and also for the cost and risk for the government. Indexation is an important topic. Because as we've seen in recent years, costs can change quite significantly over time. CFD strike prices could or should be indexed, and the question is to what kind of indexes and what timelines. And then another question can be like, to what extent do you actually want to tender the CFD support, or you want to try first, for example, to tender without support, like just merchant with PPA, for example, to not kind of intervene with the PPA market, and then see if there's no success in the auction, then tender it with CFD support, and these sorts of questions are also very, very important. Now, a quick focus, because that is very topical. Again, the question of whether CFD should be paid on actual generation, so metered output, or on the potential output. And that is a discussion that is going on in the UK, for example, as well, where there have been a CFD for quite a while. So far, it's producer-based or production-based, but there's the same discussions that has happened in Germany, that I will touch on now. So the question had been raised by the previous government already last year, and the Ministry of Economics came up with 4 potential options, and these has been discussed in the industry quite substantially. 2 of these options are so-called as-produced models, where the payments are based on the actual production of the plant, and then there are 2 of the options are so-called capability-based. So the payment there is based on what could have been the production, and the difference really is on kind of incentives and risks. And if we look at option, maybe I speed things up a bit. If we look at options 1 and 2, the as-produced variants, then option 2 is pretty much what I just explained, the kind of classical CFD, which we see in the UK. On option 1 is a cap and floor mechanism, where there is a bit of an area where there wouldn't be any payment in either direction. So it leaves some risks and opportunities with the developer. And then options 3 and 4, which are capability based, there the payment wouldn't be based on the actual production, because that can come with some biased incentives for production. For example, that you still produce during negative price hours, which from a system perspective we don't want. So a capability-based model would try to avoid that and pay for every production that you could have done. So if prices are negative and you don't produce, you still get a support, so that you don't have an incentive to produce. And maybe to skip all the details of this, but the government had been in favor of one of these models, so capability-based, and actually that is also what we see in Denmark now, while in UK it's still a production-based model. This has been, as I said, discussed in the industry quite a bit. There was a very kind of mixed view on the 4 models, as you can see here. That is kind of status from November, where the consultation took place. But yeah, you can see it's controversial. And to kind of try to summarize the key benefits first of these capability-based CFDs is, as I said, the incentives are more aligned with the system benefits in particular, and there's no volume risk also from negative prices, so it provides higher certainty for the developer on the one hand, but there's also a bit of a basis risk, which is triggered by this benchmark that need to be constructed because the payment is not based on your actual production, but on a kind of on a proxy for what you could have produced. So this can reference a plant, for example, gets quite some importance for your risk profile, and if this reference plant doesn't really doesn't appropriately reflect your actual plant and your actual risk, then this comes with a substantial basis risk. And in addition, this whole system is farther away from the previous market premium instrument, which is more or less a one-size CFD. So this would probably come with longer lead times and more efforts to actually implement. And then there's all sorts of questions in detail, like for example, how the production potential would be measured, what the reference or plant would be, etc., which would need to be addressed and are, as far as I know, not yet discussed in detail. So I guess I skip the UK for now and come to my last slide to allow for some question discussion. So I talked about auction design and CFDs in particular, but it's important to know that there is like more than just auction design that you could think about. On the left-hand side, you see a couple of issues that have been identified, like comparatively low full-load hours due to wake effects and some like knock-on effects, if you want. And then on the right-hand side here, you see potential things to think about and discuss, and happy to discuss them. And now, for example, there's discussions on whether the zone 5, so called the Duckbill, so the end of the German zone, should actually be built out or should be spared. And for example, as an alternative, you could think about radial connection of plants in other in the seas of other countries like Denmark, but connect them to Germany, which could lead to kind of better utilization because they have better conditions in these areas that we have. You could think about offshore hydrogen and offshore hydrogen pipelines. You could think about reducing the capacity densities. Overplanting is an important topic that we discussed in Germany. So this whole kind of offshore system design, which goes a bit beyond auction design, is important. That's it from my side. Stefan, over to you. Thank you for your attention.
Thank you very much, Matthias, for this profound analysis. We will come to you in a few minutes again. As you can imagine, BWO and its experts conducted a deep and detailed debate on the design of the market and investment framework for offshore wind energy. And the result is a very detailed discussion paper. And to be honest, this discussion paper is for gourmets. But we've also created a short version for fast food lovers or those who just need it quick and dirty. In the chat, you will find now, I hope so now, a link. Just click it, please. Like it. Then follow us. Don't forget this. And very important now, make a repost. Make us go viral with these recommendations. This will help the whole branch. Please do it right now. And I will go on in the meantime and ask some questions to Matthias. So, yeah, Matthias, for the first time in Germany, auctions of offshore wind energy have failed. And while some of us discussed this possibility already a few months ago, many were still surprised by the result. What about you? Were you among those surprised by this result from the market or investor perspective?
Well, I guess it depends on the time you ask me. So like recently before the auction, like that was more or less, I guess, clear to me and many others that this would kind of fail. As you could see from the graph that I showed, that yeah, it was more or less clear that there wouldn't be any bidders willing to pay under these current conditions. If I mean, if you go back 2 years, then obviously like there was a bit of a euphoria that like bidders would be willing to pay more and more to governments, and governments would be willing to generate like large amounts of money. But as I said, this changed over time. So no, it didn't come as a surprise. No.
Do you expect market conditions for offshore wind to improve or to get worse in the next years? What are the main pain points from your point of view?
That's a good question. In the short term, I wouldn't expect any substantial kind of improvements, I guess. At least I don't really see it. In the longer term, see, we never know like how interest rates and general kind of price cost developments will occur or will develop. Then the price expectations in the cannibalization effect, that is, I mean, that's more or less foreseeable. It will depend on developments in other countries, in the general of North Sea in particular development, but this is more or less clear. And then the other interesting question and an important question is around supply chains, whether there can be improvements. I wouldn't expect them in short term, but in the midterm, I would hope for it. Yeah.
What effect might NSEA have on the market conditions and investment environment?
Sorry, can I say that again?
Yeah, what effect might NSEA have on the market conditions and the investment environment?
NSEA is what?
Net Zero Industry Act.
Sorry. Okay.
Sorry.
Yeah, I mean, that is an important aspect. So I guess it has two elements. One is on components. So the Net Zero Industry Act, it kind of requires that some shares of raw materials need to be bought within the EU. So this kind of increases cost in a way for some components. But then on the other hand, it also shows that the EU is willing to pay for some form of autarky and independence from other countries, and that I guess should, like in this sense, should also speak in favor of wind offshore, because as I said earlier, it's one of the technologies where we have quite some domestic potentials, and that could speak in favor of actually making use of them and being willing to pay for them.
I will start, I will make a last question, then I will get to the questions of our auditorium. From your point of view, how strong is the effect of the current political debates about the reduction of renewable energy expansion targets, including the 2045 target for offshore wind in Germany? What signals does the industry need for planning security?
Yeah, so the current situation is, of course, is like really a bad development for everyone, because now it's nobody can really rely on what's going to happen next. It's also for the whole supply chain. This kind of uncertainty is really a very bad situation. So I think it's very important to come up with a mechanism soon that will, or maybe on two sides. There's changes needed. One is either confirmation or a discussion with a decision on whether to stick to the offshore targets, and then live on it. So saying really come up with a mechanism that is able to deliver and achieve these targets, so that both also the network operators, the component producers, the whole industry, including the offshore developers, can kind of rely on some developments going forward. I mean, it's always a kind of a trade-off between kind of competition and technology competition as well, on the one hand, and then certainty about developments on the other hand. So you have to strike that balance. But the current situation is obviously not a good one.
Okay. By the way, one more question that's maybe more a personal one. The Ministry of Economics already announced that they will have a look on the system in the United Kingdom, and they announced that they might change the auction design for the next, not for the next, but for the auction in 2027. Do you think this is enough? Shouldn't we be faster and maybe postpone the auctions for a few months? What's your idea about this?
Yeah, that's a very good question. So I guess you could, there's like two levers you could work on. One is really to kind of overhaul the whole kind of design and introduce something like a CFD, which may indeed take a bit longer, because you would also need state aid notification for it, and you need to design it and discuss it. And whether that's possible until summer 2026, yeah, that's, I guess, a fair question. So if a couple of months could help and postpone that auction into winter or whatever, I guess that could be worth thinking about. And then the other kind of more kind of second best maybe solution is to think about other smaller kind of levers, like I talked about, like the timelines, the penalty regime, which is kind of really strict in a way. So whether there is like changes you could do within the current framework, which could lead to increased bids. Whether that's enough, that's enough to make a positive business case and actually see positive bids again in the next auction. That's a tricky one. Not sure when that would be enough.
Yeah, we are also not sure about if minor changes might lead to successful auctions next year. But nevertheless, we, of course, made some recommendations in our document we just posted. By the way, if you haven't done yet, please share it and make us go viral again. Okay, now let's get to the questions of our auditorium. I will start with a question from Sascha Ansel from PwC. From your point of view, are the possible delays seen in some grid connections a reasonable part for the bidder's decision not to participate?
Yeah, I mean, it adds additional uncertainty to the business case when you can't be sure when to go into operation. And although there is kind of the Haftungsumlage, so there's some compensation for wind offshore developers when the grid connection is not there in time, it still like makes it very difficult to kind of deal with things like when to order components, when to enter into PPA or into all sorts of contracts, PPAs, for example. So that is for sure an issue. Whether that's the key driver, not so sure.
Okay, how about the effects of capacity density and wake effects? I'm assuming that it is pretty high and could lead to more losses in annual energy production.
Yeah, that's true. And I mean, I showed where the areas are located. They're pretty much in between. And according to Fraunhofer research, we can expect quite some wake effects in this area, which means that the full load hours will go down because there's kind of shadowing effect from other offshore wind farms. So that is exactly why the public authority BSH has now started a discussion whether we should kind of reduce the density. So assign and auction lower capacity per area to reduce the wake effects. And I mean, that at the end is a bit of a technical discussion, but you can, of course, imply what this means for the business case as well.
Matthias, the next is a really tricky one. It comes from Robert Seehafer Aquaventus. For Matthias, your question, of course. The cannibalization effects to me is pure market function of supply and demand in the German power market. How do price capture models forecasts reflect potential storage options like onshore batteries and offshore hydrogen in the future, especially beyond 2040?
Yeah, that's a good question. So maybe to start with the price capture, like the standard price capture, including the one I showed, I assume, it wasn't my own graph analysis, but I assume this is just like pure simple mathematics. So kind of multiplying the electricity base price with the capacity factor. So that does not take into account options like offshore hydrogen or batteries. So you can increase the value of your sales if you enter into or invest into assets or enter into contracts to kind of store electricity or transform that into hydrogen. And that is for sure something you should and the system as a whole needs to think about. So I'm not saying that cannibalization per se is kind of killing the case for offshore, onshore, and for solar. I mean, it's kind of the same. So batteries do help there as well, and will need to help there because we don't have many other options, right? Than onshore, offshore, wind, and solar. So yeah, absolutely, Robert, you're right. These technologies will need to play an important role.
The next question is a political one. Is there ever any chance to come to one harmonized auction system design within Europe, which could be a market push itself?
Well, that's a tough one. So in the short to midterm, I wouldn't see that, to be honest. particularly because when we talk about the North Sea, we're not talking about EU, but also about UK and Norway. So there, like, I wouldn't see a harmonized auction so soon, but there will be and should be some coordination between countries. Maybe not, well, for tenders that can make sense, because otherwise, like, there can be kind of biased competition that don't have the system. But in particular also for planning purposes. And I talked about the option to connect plants in Denmark, for example, or in the UK to Germany with radial connection. And that's, of course, something where countries need to work together. Otherwise, that won't happen. And then one big question, for example, is to which countries' renewable targets would that production count? So yeah, in the long term, I guess it's a very it would be nice, would be cool, but in the short term, I wouldn't see that.
Okay, we come to the last question for today, and yeah, it's also maybe also a political one. Should governments play a role protecting the industry for unexpected cost increases, especially during the period between submission and FID? Means CFD include price indexes. Which ones could be suitable from your point of view?
Yeah, it's again good one. So I think it's right. Like when we talk about wind offshore, like the bulk of the cost is capex, right? So there's also opex over the lifetime of the project duration, but the key risk is whether or how the capex develop between the bid award and the FID. Or bid submission FID, so pretty much what the colleague has raised here. So like even if you had a CFD that kind of fixes the strike price of the project lifetime, there's still a risk that between bid submission and actually FID, the cost, for example, go up, and you have higher costs, and your business case is screwed. And this has happened in the past. So developers with a successful award have been pulled out, has used this as an option, has pulled out. And one way to address this is indeed with indexation, where the strike price could be indexed to some sort of capex development between bid submission and FID, which I think is a sensible thing to think about.
Okay, Matthias, thank you again. And I just get the message from my team that I should ask one more question, even though our time is over already. Sorry for prolonging this BWO expertise. I hope you will stay with us. One more question. How should we deal with the auction of N-10.1 and N-10.2? Will moving them to a later point to an oversupply of auction capacity in that year?
So my understanding is that it's like currently foreseen to push it to next year. Like this would become the standard reaction by the regulator. Whether you should kind of think about kind of maybe distributing that a bit more thinly over the next years, that's a fair question. Although it's only 2.5 gigawatts, so we have seen higher capacity being auctioned in recent years. So I wouldn't necessarily see this as a kind of showstopper, but yeah, fair thought to think maybe you could split and N-10.1 and N-10.2, push one to next year and the other two to the year after. Well, that also depends on the discussion we had earlier, whether when you will have the auction next year and whether that will be running in a new kind of support design or not.
Thank you, Matthias. Thank you for your profound analysis and for answering all the questions. Thank you also to our auditorium. It is always a pleasure to have you with us. And I hope to see you again at our Herbstfest, which will take place on the 15th of October in Berlin. It will be a huge party, I promise this to you. And you will find the link right now in our chat. And please register. Hope to see you soon. Bye.